things are better till now, improving. I should say not fully A, but things are improving. But other state, just what do we read in the newspaper? Calcutta, Delhi and Mumbai. Here the graphs are coming down. Whereas it is going up in Kerala, Karnataka, until now campuses are closed, so naturally we are also at home. Probably from next week we'll be going to the campus, and let's see. What about your summers? You'll be working from home or you'll be attending? You don't know.
Sir, no, we don't have clarity on that also as of now. Will only be after some time.
But expected that you people will be, latest you will be joining by, if nothing goes drastically wrong, from your 4th trimester. Unlike your seniors, because your seniors practically, they could not attend. They were here for very few days. Very unfortunate case, but that was the situation. So anyway, any question, clarification if you have? Anybody?
No, sir.
So can anybody tell me how long we had done? Oh.
Sir, till foreign exchange swaps, like combination of spot and forward and forward and forward.
Can you see the slide?
Yes, sir.
So we have done this.
Yes, sir. Done.
That is, what is a spot market, forward market, what is a foreign exchange swap, that also you have done.
Yes, sir.
This one, currency market, yes, this one, all other yes, participants.
Yes, sir.
So basically, primary price makers are professional, etc., etc. Did I before let me know, currency market?
Sir, even this is done. This slide is also done.
Whole of the
yes, sir. Even this is done.
This is done.
Yes.
Spot market, value date.
Yes, sir. Even this is done.
Good. This one, calculation of value date is done.
Yes, sir. Even is done.
Base currency, quoted currency.
Yes, sir. You even showed the list of all the things.
This one.
Yes, sir. Even is done.
This one, bid offer.
Yes.
Done, sir. So what is this is a base currency, this is a quoted currency, this is done.
Yes. Yes, sir.
How to calculate reverse quote or inverse quote? That is not done.
No, sir.
Yes.
Achha. This will be doing. Let me, did I discuss that is the restrictions which are there in different markets, like how much foreign exchange you can buy or not in India?
Yes, sir. You told around $10,000.
Around now $10,000 is your basic travel quota that you can buy, and for that I told you you need a passport and air ticket, maximum yes, 90 days before. Those are done.
Yes, sir.
Can you go and buy in the foreign exchange market? The answer is no, because there are restrictions. Okay. Anyway, so I told you about base currency and quoted currency, basically, and sometimes it is shortened to 75-80. So this is what is done, and I have also told you these are the some of the currencies. Some of them do not exist now. and this is one. And sometimes different countries different countries operate under different system. See, for example, UK, United Kingdom, consists of Great Britain, Scotland, Northern Ireland, and Wales. So I don't know about others, but Scotland, if you see, so they have a common, all these, their currencies UK pound. So UK pound is accepted in Scotland. It is like, but Scotland also has, so their central bank is known as Bank of England, but Scotland also has Bank of Scotland, which prints its note. So those pounds, Scottish pound, that is not accepted outside Scotland, but in Scotland both are accepted. So it's a, different countries have different system. They operate on the basis of that. So anyway, can you interpret these rates? This we have done?
No, sir, we haven't.
We have not?
No, sir.
Just 1 minute. This is the rate. So if I ask you to interpret this now, before that, I have already shown you that this 1.4575, 1.4580 is shortened to 1.4575 and 80. And I have also told you that is US dollar Swiss franc means if you want to buy US dollar, you have to pay 1.4580 Swiss franc. If you want to sell $1 US, you will be getting 1.4575. Now, how do you know that you will be with this rate? You will be buying. Why not? If you want to buy 1 Swiss franc, you have to pay this amount of US dollar. That is the beauty of base currency and quoted currency. So for base currency, it is unit is 1, and for that, how much is the quoted currency? So 1 US dollar is equal to how much Swiss franc? Okay. So here you have 1 GBP is equal to how much US dollar? So 1.5665, and this one will be 1.5670. So you have to make out that the same numbers are there here. What about this one, US dollar Deutschmark?
1.9905.
So if I write 1.9905, does it make sense? I also told you that when you buy, you have to pay more. When you sell, you get less.
Yes, sir.
When you buy, you pay more. When you sell, you get less. Okay.
2.3.
Always remember, it is like this. When you are buying US dollar, you are also selling Swiss franc. When you are buying, somebody is selling. So when you are going to a bank, I told you that when you buy, you have to pay more. Similarly, when a bank sells, bank will receive more. So when you are buying US dollar, bank is selling US dollar. When you are selling US dollar, bank is buying US dollar. So you are buying at a higher rate, selling at a lower rate. Bank is selling at a higher rate, buying at a lower rate. When you are buying US dollar, that means you are selling Swiss franc. When you are selling US dollar, that means you are buying Swiss franc. Always remember that. Okay. Now, what about this rate? So if you buy, you are paying 1.9905, and when you are selling, you are getting 1.9995. So you will buy at a lower rate, sell at a higher rate.
No,
this
sir.
Rate, so it is not possible.
2.0005.
So it will be 2.0005. Is that clear? Does it make sense?
Yes, sir.
So what about GBP Euro? 1.2545 and 1.2550. Is it clear?
Yes, sir.
So USD INR 46.7585. Now here, if you want to represent this, you cannot represent only 46.7585 and 46. You cannot represent like this. If you represent, it doesn't make sense. Okay. Got my point?
Yes, sir.
So has to be at least 46.7585 and 685. and so on. Got it?
Yes, sir.
Now consider a case. Let me just show you. Today is 28/01/2022. So you can see the what file now?
Yes, sir.
So dollar rupee. See 75.74 and 75 point 80, 74 and 80. So what does it mean? First of all, dollar is the base currency, rupee is the quoted currency. Any confusion? This is the base currency, this is the quoted currency. Any confusion?
Sir, just to be clear, base currency is the domestic currency, right? Or the
quoted currency is the domestic currency.
Okay, sir. Thank you.
So I'll come to that. In any country, this is called in India, this is called the direct quote. So in India, if Indian rupee will be the quoted currency. In US dollar will be the quoted currency. In UK pound will be the quoted currency, and so on. Any question? And
No, sir.
in India, this is called the direct quote. In India, when Indian rupee will be the quoted currency, it is called the direct quote. Okay. What is the other one? I'll come. But it is possible that you have a two-way quote, but it is also possible now. It's a, as I've told you, this is all this interbank foreign exchange market is a two OTC market where there are two parties involved. One is the rate at which you buy, one is the rate at which you sell. Okay, so when you ask the rate, the bank will offer you this rate, and the difference is bank's profit. However, it can also operate like this. So say dollar and rupee, say 75.77 with a brokerage or commission, whatever name you give, brokerage with a brokerage of say 0.03. Got it? So what happens if you want to buy? This is the rate you are paying. Along with that, you are paying a commission or brokerage of this. Okay?
Yes, sir.
Commission or brokerage of this. So how much you are paying then? 75.77 plus 0.03, that is 75.80. Is that clear?
Yes, sir.
On the other hand, if you sell $1, how much you get? 75.74
minus 0.03.
So 75.77 minus 0.03. Is that okay? So ultimately 75.74. Yes or no?
Yes,
so comes to the same thing. Normally, either a singlet and a commission or brokerage, or two-way quote. Is that clear?
Yes, sir.
So the first part. Second is, suppose you have a direct quote. So this is the rate. Or can you find from this? Simple. 1 divided by 75.77.
Yes, sir.
So what will be the rate? 1 divided by 75.
0.0131.
0.0131.
131.
So this will be the indirect quote or reciprocal rate in India. I repeat, this is the direct quote in India. This is the direct quote in India. This is direct quote or direct quote in India. This is called indirect quote or reciprocal rate in. Is it clear?
Yes, sir.
Make sense? Yes or no?
Yes, sir.
So if I take this, this is a, again, can you find the indirect quote from this? Huh?
Yes, sir.
What?
$0.0132.
No. I first 1 upon
1/75.74.
1 upon 75.74 and 1 upon
75.80.
75.80. So what is the rate coming?
For 1 upon 75.74, it's 0.0132, sir.
So 0.0132.
Yes, sir.
And this one?
0.01319.
319 and 32.
Yes, sir.
Take one. 32 and next one.
Please wait for a second.
0.01. If you make it
320. 320. 320.
So the situation is you can buy at a lower price and sell at a higher price. Is it possible?
No, sir.
So let me explain you clearly. So what does this mean actually? Dollar, rupee. What is this mean and what does this mean? On a basic idea, what I'm trying to say is what does the first rate mean and what does the second rate means? Second rate means this rate means what? You buy dollar. Okay?
Yes, sir.
Yes or no? Huh?
Yes, sir.
And what I told you, when you buy one currency, you sell the other currency?
Yes, sir.
So if you buy dollar, what do you sell?
Rupee.
Buy USD and sell. Yes or no?
Yes, sir.
What about this one? What about this one?
Sell USD and buy INR.
Sell USD and buy
INR.
Okay.
Yes, sir.
So when I write rupee and dollar, what do I mean? So this one is, first one is
Buy USD.
Buy rupee, sell USD.
Buy rupee, sell USD. Yes.
Buy INR, sell USD. Is that clear to everybody?
Excuse me, sir.
Yes, yes.
Sir, in the previous example, sell USD and buy INR. In that example, if there is a seller for 75.74, like you would sell one USD for 75.
You go to a bank. Bank offers you these two rate. This is a bid rate. This is the ask rate. Or offer rate. That means if you want to buy, you have to pay 75.80 to the bank, and if you sell $1, you will be receiving 75.74 rupees. So always remember, when you are buying one currency, you are selling the other currency. When you are selling one currency, you are buying the other currency. Is it okay? So yes, why this rate is buy USD and sell INR? Because US dollar is the base currency, INR is the quoted currency here. Is it okay? Here it is just opposite. What does this rate mean? This rate means buy INR and
sell USD.
Sell USD. And what about this rate?
Sell INR and buy USD.
So now you can make out this one is 75.80 is sell INR because you are buying USD.
Yes, sir.
So sell INR and buy USD. So this will be 75.80. Is that clear? And this rate is buy INR and sell USD. Buy INR and sell USD. 75.74. Is that clear?
Yes, sir.
So now this rate will be 19 and this will be
20.
Makes sense? Now
yes,
always remember this rate has to be more than this rate. Is that clear? So what is base currency? What is quoted currency? What is direct quote? What is indirect quote? Everything is clear?
Yes, sir.
Sir, excuse me, sir. Sir, like in the indirect quote, is it important that the last representation which you have made 0.01319 and 0.01320? So we have reversed the position. So what is the basic?
Why you have reversed the position?
So because you mentioned that.
First of all, always remember this rate has to be more than this rate.
Okay.
Because bank is, everybody is here to make profit. Bank is a market maker. Who is a market maker? Who is making a market for you? Why should bank will sell at a lower price and buy at a higher price? Not possible.
No, sir.
So whoever is the money, you are asking for a rate. So bank will always sell you at a higher rate, buy at a lower rate. So that is which one? Now this, for that you have the base currency and quoted currency symbol. So when I say dollar is the base currency, rupee is the quoted currency, that means you can buy and sell dollar by paying rupee. When I say rupee is the base currency, dollar is the quoted currency, you can buy and sell rupee by paying dollar. Then you see this is the buying rate and this is the selling rate. So what is the buying rate? Buy rupee and sell dollar. Buy rupee and sell dollar. Is that okay? So 1 upon 75.74. Buy USD and sell INR. Buy USD and sell INR. 1 upon 75.80. Yeah.
Sir, that the sell USD and buy INR oblique buy USD and sell INR, that line, sir, it is the from the point of view of the customer, right? Not from the point of view of the bank.
But how you look at it? if you look from customer's angle, customer will buy at a higher price, sell at a lower price. If
Yes,
you
sir.
look from a banker's angle, bank will sell at a higher price, buy at a lower price. I told you that when you buy, when you are the buyer, bank is the seller.
Yes, yes, sir.
Got it?
Yes, sir. Yes, sir.
Proceed further.
Yes, sir.
Ashish Sinha, you are there? (9D). Unfortunate part is whenever I call somebody, but in most of the cases I don't find him or her. Anyway, this part is clear.
Yes, sir.
Proceed,
Yes, sir.
proceed further.
Yes, sir.
Yes, sir.
So more or less, last 2 points are called points and pips. That also I have told you. Quotation in European terms and quotation in American terms is not that important. So quotation in European terms means units of a currency per unit of US dollar. So 1 US dollar is equal to how much INR, 1 US dollar is equal to how much euro, 1 US dollar is equal to how much GBP, and etc. Similarly, quotation in American terms is just opposite. 1 GBP is equal to how much US dollar, 1 euro is equal to how much US dollar, and so on. So quotation in European terms and American terms are not that important, whereas direct quote and indirect quote are important. That I have already explained to you. What is a direct quote? What is an indirect quote? So with this, suppose you have a situation like this. So this is say a bank in Citibank, and this is say JP Morgan. So you are an American customer, go to say Citibank. Citibank says if you against GBP USD, it offers you this rate. So what does it mean? If you want to buy 1 GBP by paying US dollar, you have to pay 1.4560. If you want to sell 1 GBP, you will be getting 1.4550. Getting this rate from Citibank, you go to JP Morgan. JP Morgan says if you want to buy 1 GBP, you have to pay 1.4548. If you sell 1 GBP, you will be getting 1.4538. So for two banks, the rates are perfect. This rate is more than this rate. Again, this rate is more than this rate. But when you compare those two rates, you find there is some anomaly. Why? You can buy 1 GBP from JP Morgan and sell that GBP to Citibank. Why? This is 1.4548, 1.4550. So when you compare these two banks, you can buy from bank B at a lower rate, sell it to bank A at a higher rate. Okay, so this is called interbank arbitrage. Is it possible? Sometimes yes. Why? Why sometimes? Because as soon as you have an opportunity like this, so there will be many arbitrageurs who will try to make profit like this. There will be many arbitrageurs who will be trying to take advantage of this. Is that clear? So as soon as people will start buying, many people will start buying from bank B, the prices are likely to go up. And as soon as a lot of people are selling GBP in bank A, the prices are likely to go down. So one thing you can make out, as long as this price is less than this price, there is an arbitrage opportunity. As long as this price is less than this price, there is an arbitrage opportunity. But suppose this is, even if it is 1.4549 and this is also 1.4549, there is no arbitrage opportunity. Any question? Any question?
No, sir.
Clear?
Sir, I have a question. I have a doubt that what is the probable reason for this sort of an opportunity arising? Like they all are indexed to the same benchmark. So, like, why does this happen?
So first of all, there is no. It is no, even if two stock markets there are mispricing. Okay, like BSE NSE, sometimes there is a price difference. So, depends upon the demand and supply of these two markets. So suppose you trade in NSE, you have a right to trade in NSE, you have a right to trade in BSE also. Okay, because your shares are listed in both the exchanges. So now question is, two banks depends upon their demand and supply in that bank. Now, normally, what do you do when you are, if you have an account or if you are a customer of State Bank of India, you will prefer to do all the transactions from State Bank of India. On the other hand, if it is HDFC, you will prefer to do all the transactions through HDFC. Yeah? However, you can have account in both the banks. Most of the cases, you will have account in both the banks, and different banks can give you different rates. Just imagine a situation. How come different banks have different interest rates? It may be negligible, but there are different interests, even in housing loan. That depends upon the cost of funds of different banks. Make sense?
Yes, sir. Got the idea.
So depends upon the demand and supply of of different banks. Huh? So go to the next slide.
Sir, can you please go to the previous slide once? Sir, here European and American terms are reverse, right?
Not required much. Told you.
Okay, sir.
European terms is when everything, major markets were initially Europe and US. Huh? So that is why European terms means $1 US is equal to how much European currencies. Not euro, huh? Because these concepts were introduced before introduction of euro. Next slide.
Yes, sir.
Let me solve this problem, and I also expect you to solve the problem with me. So consider these two cases. Last one, which I have shown you. The last one means this one, what I have shown you. Both these are two banks. When you go to State Bank of India, you go to HDFC, huh? In the same country. Here, these two banks are in two different countries. This is in Zurich, this is in New York. Got it? Can you see the slide? What file now?
Yes, sir.
So now you have to find out. Now, seeing this rate, you cannot find out. See, what arbitrage is basically, if you start with US dollar, you have to end with US dollar only, or if you start with Swiss franc, you have to end with Swiss franc only. Now, suppose here you start with US dollar, here you have to end with US dollar. If you invest US dollar, you have to get back US dollar, or if you invest Swiss franc, you have to get back Swiss franc. Okay. So here the rates are in two different countries. You have just, so this is, you can see in Zurich, Swiss franc will be the quoted currency, US dollar will be the home currency, and in New York, US dollar will be the quoted currency and Swiss franc will be the base currency. So in either market, you have to find the reciprocal rate on or inverse quote. Is that okay? So let us start in reciprocal.
Sir, I want to ask one question.
First, before I write, yeah, ask.
Sir, for arbitrage, can we buy shares on the same day from NSE and sell them to BSE if the price difference is of 1 rupee?
First of all, you can't. Here you can. Why you can't? Because of the T+2 trading settlement day. So suppose you buy today and BSE at the end of the day, and sell today at NSE. So both the exchanges at the end of the day, they will send two files, one to the clearing corporation and one to the depositories. So clearing corporation will clear your account, but depositories will check whether your Demat account has the shares or not. So today, if you make the transaction, by tomorrow, you have to transfer the shares to your Demat account. You means your broker's Demat account, huh? Because the stock exchange does not know you. Stock exchange knows your broker. So once the clearing corporation will check your broker's bank account and they will block that amount. And tomorrow, that is tomorrow. So at the end of today, they will send the file, and tomorrow they will block the account, block the share in your Demat account and block the amount in one person's Demat account and one person's bank account. And next day, the buyer will get the shares and seller will get the money. Now that will happen together in both the cases. So by the time you get the share, after that you will not be able to deliver. Okay? Make sense?
Okay, sir.
So that is how it operates. Here, these are all A market. What do you call? OTC market, where money can be transferred from one account to another account at any point of time, and if there is a difference of 1 hour, 2 hour, not an issue. Here also it is in 2 days, because if you remember correctly, spot rate delivery is after 2 days, I told you, and forward market delivery is number of months plus 2 days. Anyway, any other question on that?
Sir, what was the term you just said about the market?
Spot market and forward market?
No, the market where money can be easily transferred and there's not an issue.
See, it is between, if it is between two banks, so one bank will money will be transferred. You buy from you. See, in this case only, you buy in Zurich and sell it in New York. Say,
Yes, sir.
So whatever you buy it in Zurich, that will be transferred. It is possible that you are in London. So whatever you buy, whatever currency you buy in Zurich, that will be transferred to your account in London, and same can be transferred to your same amount you can transfer to your New York client, because money can be transferred very fast. And since it is two, on my point?
Yes, sir.
Yes, we'll find reciprocal rate in which one? Zurich. So if I find reciprocal rate in Zurich, it will be USD. Yes or no? Yes or no? This
Yes,
is the
sir.
rate in Zurich.
Yes, sir.
So 1 divided by 1.4962 and 1 divided by
1.4955.
955. So comes to please.
So 0.6683. Point 6686.
867.
8687.
I'll make it 87. Chalo. So you can buy Swiss franc in Zurich by paying US dollar and sell Swiss franc in New York and make some profit. So what is your investment? Your investment is US dollar 0.6687. With that, you can buy a Swiss franc in Zurich. Okay. Sell that Swiss franc in New York and get 0.6695 USD. Is that clear? Yes or no?
Yes, sir.
Looks interesting.
Yes, sir.
So did I tell you?
Any charges? We should make a bigger trade, right? For this kind of make a
1 million? 1 million? Makes sense. Around 30 years back, I read a book called Money Bazaar. Did I tell you?
No, sir.
I'm looking for that book. I'm looking for that book. It is not available, huh? So though the word bazaar is used in India, but this is written by a foreign author. So there is one trader in US. So he gives a call in the morning to his London broker. So after initial hello, hi, good morning and everything. So he asks a question, how is the little queen doing? What is little queen? It's the pound. So they are symbol for pound. So the broker quotes last 2 digits. There may be sometimes UK pound, US dollar, it goes up to 10 digits. Suppose last 2 digits, then the other side, the investor says, okay, buy me 20. So that was the case. 20 means 20 million. So that is the kind of investment which is done by international brokers, international investors. Got my point? So I'll show you how what kind of conversation takes place between two banks in the international market, probably in the next class. Today, possible today only or otherwise next class. So is that fine?
Yes, sir.
Out here.
Is this?
So will the transaction cost across the two countries be considered in this case when we are buying from one country and selling in another?
So I told you that this is excluding GST.
Okay, sir.
Now, what kind of transaction cost you are talking about? So suppose it is possible that you are in London and what are the things possible? Suppose you are in London, this is the rate available in Zurich, this is the rate available in New York. Also, suppose you are in Zurich, you are in Zurich, this is the rate available in Zurich, and this is also the rate available in Zurich. That is also possible. Because in any country, you can get even if you get a direct code, you can convert that into indirect code. So both the rates are available. In the last problem, what I have shown you, that is both the rates are available in two countries. It is possible that I told you that is suppose you are in London. These are all international banks. They are making transaction, and suppose this is the rate given by one bank. This is the rate given by another bank in Zurich and New York. And the client who is sitting, or that is also another dealer or bank who also has an office in Zurich, who also has an office in New York. That is also possible. Now you are supposed to pay the tax on the profit which you make. Number one, when there is a transaction, first of all, I told you that here there is no transaction cost or there is no charges by any of these banks because the difference is their profit. Now you are a trader who is buying in Zurich and selling in New York. Okay, so you are making a profit, and where you will be paid taxes, that depends upon where you are situated. Got my point?
Yes, sir. Thank you.
Tax is different. Okay, so see, tax will be paid on profit. So here 1 million which I am talking about, that is you are making the profit right now. So once you make the profit, on that you will be paying taxes. So if you make a profit of only, nobody will trade in $1 or something. So if you make a profit of only this amount, naturally you will do that.
Okay.
But Any other transaction cost is as per the rule which is applicable in that particular country. Make sense?
Yes, sir.
Okay. So go to the next problem, which is again slightly more critical. So this one, how you do is given. And eventually arbitrage will go because, due to change in the demand and supply. So unknown cost. So this is so consider a case. So a New York bank is currently offering these quotes: US dollar, Japanese yen, US dollar, Australian dollar. A bank in Sydney is offering this quote: Australian dollar, Japanese yen. It is possible that instead of New York bank offering two quotes, one bank in New York is offering this quote and a bank in Tokyo is this quote. So this is a bank in Tokyo, this is a bank in New York, and this is a bank in Sydney. That is also possible. Okay. Since both the banks are in New York, and both the cases you are getting the European terms. One US dollar is equal to how much Japanese yen? So it is mentioned. So that both the banks are in New York. Forget about that. But this is base currency, this is quoted currency, that you know. So what does this rate mean? If you want to buy $1 US, you have to pay 111.10 Japanese yen. If you sell $1 US, you will be getting 110.25 Japanese yen. Similarly, if you want to buy $1 US, you will have to pay 1.6530 Australian dollar. If you sell $1 US, you will be receiving 1.6520 Australian dollar. And what about this rate? If you want to buy $1 Australian, you will have to pay 69 Japanese yen. Similarly, if you sell $1 Australian, you will be receiving 68.30 Japanese yen. Any question?
No, sir.
So before I go to the shorter method, let me tell you, arbitrage, I told you, that is if you start with a particular currency, you have to end with that percent. There are 6 possibilities. So you start with USD. From USD, suppose you convert into Australian dollar, then you convert into Japanese yen, and then you convert into again US dollar. So if you start with US dollar, you have to end with US dollar. Again, suppose you start with US dollar, convert that into Japanese yen. Two are different. First case, you are from US dollar, you are converting to Australian dollar first, then to Japanese yen. Here, Japanese yen fund first, then to Australian dollar, and then to US dollar. These two are not same. Suppose you start with Australian dollar, then to US dollar, then to Japanese yen, and then to dollar. Again, start with Australian dollar, then to Japanese yen, then to US dollar, and again to Australian dollar. Similarly, you can start with Japanese yen, to US dollar, to Australian dollar, to again start with Japanese yen, to Australian dollar, to US dollar, and again to Japanese yen. Is that okay? It is not possible that you have profit in all 6. I repeat, it is not possible that you will have profit in all 6, but it is possible that you won't have profit in any of them. I repeat, it is not possible that you will have profit in all 6, but it is possible that you won't have profit in any of them. Okay. Maximum is you have a profit of 3. So if you have a profit on this, you won't have a profit on this, and vice versa. Okay. I will show you 2. remaining for you to practice. So first one, suppose I want to go like this. US dollar, convert that to Australian dollar, convert that to Japanese yen, then convert that to again US dollar. So I start with say USD 1. So if I convert USD 1 into Australian dollar, how much I get?
$1.6530.
1.6530. Sure?
No, sir, 1.6520.
Sure?
Because yes, sir, because we get the lower price and we pay the
Lower
higher
price.
price.
Yes, sir.
I think 30 would be the right thing, sir.
Why you think 30?
So because the when we buy the Australian dollar,
first explain me this rate. What does it mean?
sir, 1.6520 is sell US dollar,
Right.
buy US dollar. Just a second, I will see in the notes. Yes, that is sell US dollar and buy Australian dollar 1.6520, and
Right.
1.6530 is sell Australian dollar and buy US dollar.
Is just so here. What are you doing?
Selling US dollar and buying Australian dollar.
So what will be the rate?
1.6520.
Make sense to everybody?
Yes.
Yes, sir.
Now I want to convert this into Japanese yen. So first of all, what will be the rate? You fix up that. So if I want to convert Australian dollar to Japanese yen, I'll have to sell Australian dollar. If I sell Australian dollar, how much Japanese yen I'll get?
68.3 per Australian dollar.
68.3.
Absolutely. Any confusion with anybody?
No, sir.
So 1.6520 into 68.30. Is that clear?
Yes, sir.
So equal to Japanese yen, how much? 1.6520 into 68.30.
$112.8316.
112.8.
8316.
So now I'll have to convert that into US dollar. So now what I am doing? I am with Japanese yen, I am buying US dollar. So this is the rate of US dollar and Japanese yen. So if you want to buy US dollar, how much you pay?
Sir, 111.10. We have to divide it.
So that is, we have to divide it. But is that clear to everybody?
Yes, sir.
Yes, sir.
Equal to US dollar 112.8316 divided by 111.10 equal to USD, how much?
1.0155.
1.0155. So I started with $1 US, I am ending with 1.0155 US dollars. So my profit is USD 0.0155. Any question, confusion? Anybody?
No, sir.
Clear to everybody?
Yes, sir.
If I do this, then I have USD 1. So if I convert USD 1 to Japanese yen,
0.25.
Japanese yen. So $1 is equal to how much Japanese yen? When I say $1 is equal to how much Japanese yen, that means I'll have to sell US dollar to get Japanese yen. So 110.110.25. Is that clear to everybody? Is that clear to everybody?
Yes, sir.
So now what I'll have to do, I have to convert that to Australian dollar. Huh? So Japanese yen to Australian dollar. What will be the rate?
69.
Why?
Because we are buying Australian dollar.
Right. We are buying, and this is the rate is, if you want to buy Australian dollar, you have to pay 69 Japanese yen. If you sell Australian dollar, 68.30. We are buying Australian dollar. So 110.25 divided by 69. So equal to Australian dollar, how much? 110.25 divided by 69.
1.5978.
1.5978. Now I'll have to convert this Australian dollar to US dollar. So equal to US dollar. I am saying I'll convert this Australian dollar to US dollar. So what will be the rate?
Dr. Perky.
Just 1 minute. Huh? Just 1 minute. Huh? हाँ डॉक्टर बोलूँ রবিবার সকালে বা আচ্ছা রবিবার সকালে করার সময় গ্যালি হয়ে যাবে তাই তো এই এক মিনিট হলো যদি সানডে ডাক্তারের ওখানে কখন যাবে ডাক্তারবাবু ওখানে 9টা বা 10টা 9টা থেকে 10টা চলে যাবো 9টায় চলে যেতে পারি কোনো অসুবিধা নেই হ্যাঁ মানে আসলে আমাদের বসতে হবে তাই তো সঙ্গে সঙ্গে করে দেবো আচ্ছা ঠিক আছে ঠিক আছে Extremely sorry. Extremely sorry. So is this clear? So, hello, you are there?
Yes.
Yes, sir.
Yeah. Sorry. So now I want to buy USD by paying Australian dollar. So what will be the rate?
1.6530.
Divide by 1.
So 1.5978 divided by 1.6530. So equal to
0.9666.
0.9666. So I started with $1 I am ending with 0.966 US. So I have a loss. So loss of USD
0.0333.
0.0334. Is that clear?
Yes, sir.
So like we have done, I have done 2. You practice the remaining 4. You practice the remaining 4. Okay? Any question, confusion? Any question, confusion with this?
No, sir.
So now I'll also show you something. So as I have told you that when we started the foreign exchange market, I told you where foreign currencies are traded. So these are the 2 rates in New York. These are the 2 rates in New York. But you must have seen that is one currency is US dollar, but that is the currency of New York. Okay. So this is the rate in Sydney. So one currency is Australian dollar. Okay. So can you find out the rate between Australian dollar and Japanese yen in New York from this? So I want to find out Australian dollar and Japanese yen. Got my point? Yes or no?
Yes, sir. Yes, sir.
So I'm giving you 1 minute to think. So again, let me also write what does this rate mean? Buy
Australian dollar and sell Japanese yen.
Right. What about this rate?
Sell Australian dollar and buy Japanese yen.
No, but whatever you do, you have to do via US dollar. Got it? So let me first start, say this rate. sell Australian dollar and buy Japanese yen. Is that fine? Huh?
Yes, sir.
So first let me sell. How much I said? How if I sell Australian dollar and buy? So I have to first convert Australian dollar to US dollar. Yes or no?
Yes, sir.
So you can sell 1 Australian dollar, or if you sell, simple term, if you sell Australian dollar 1.6530, you get US dollar 1. Yes or no?
Yes, sir.
Huh? Anybody?
Yes,
any question? Anybody? Any question? I have to sell Australian dollar. So first here there is no rate for Australian dollar. So I have to use this rate. If I sell 1.6530 Australian dollar, then only I can buy 1 US dollar. Or if you want to make it more, if you sell 1 Australian dollar, how much US dollar you can buy? That also you can find out. That also you can do. Any question? Anybody? If you now convert US dollar to and buy Japanese yen, so what do you need to do? You have to sell US dollar and get Japanese yen. Yes or no?
Yes, sir.
So that means how much Japanese yen?
110.25.
110.25. Any question, anybody? Anybody, any question? Anybody, any question? So,
No.
Australian dollar 1.6530 is equal to Japanese yen 110.25. So how much? How much?
66.696.
66.696.
699.
So here what rate I got? I got first rate, huh? 66.6969. Why I am saying first rate? I sold Australian dollar and ultimately bought Japanese yen. Is that okay? I sold Australian dollar and bought Japanese yen. Any question? Any question, anybody? No, so what is the next one? So next one is sell Japanese yen and buy Australian dollar. So I'll have to start from the first one. Sell Japanese yen and buy Australian dollar. If I want to sell Japanese yen, I'll have to again go via USD. So first I'll be buying 1 USD and sell Japanese yen. How much Japanese yen I need to sell? 111.10. Yes or no?
Yes, sir.
So now sell Japanese yen How much? 111.10. That is the rate, na?
Yes, sir.
Sell Japanese yen 111.10 and buy, which is equal to
$1 US.
USD 1. Now again you sell USD and buy Australian dollar. So what is the rate? USD Australian dollar, what is the rate? This is the rate. So here what are you doing? Selling US dollar and buying Australian dollar. So selling US dollar and buying Australian dollar?
1.6520.
So equal to Australian dollar 1.6520. So now I get Australian dollar 1.6520 equal to Japanese yen 111.10. So Australian dollar unitary method 1 equal to how much? 111.10 divided by 1.6520. 1.6520 equal to
67.2518.
67.2518. So that is the rate here. $7.2518. So now instead of going through all the methods, so now if you see these two rates, one is 67.251, 66.6969, 67.2518. Compare this rate with the Sydney rate, 68.30, 69. So you can buy Australian dollar. You can buy Australian dollar. Where is that? You can buy Australian dollar by paying 67.2518 Japanese yen in New York. And you can sell the Australian dollar in Sydney and get 68.30 and the difference is your profit. Any question, confusion?
No, sir.
Another thing also you remember, as I have told you, that is, it is not possible that you have a profit in all, six. Maximum is you can have a profit in all three. So if you have a profit, we have a profit in this one. So you will have profit only in this sequence, like US dollar, Australian dollar, Japanese yen, US dollar. So when you start with Australian dollar, your profit will be Australian dollar, Japanese yen, US dollar, and then again Australian dollar. So your profit will be Australian dollar to Japanese yen. So this here you will have a profit. Okay. Similarly, Japanese yen, US dollar, Australian dollar, Japanese yen, US dollar, Australian dollar. So Japanese yen, here also you will have a profit. Sorry. So here also you will have a profit. Got it? So here you have a loss. See this sequence, you have a loss. US dollar, Japanese yen, Australian dollar, US dollar. US dollar, Japanese yen, Australian dollar, you have a loss. Japanese yen, Australian dollar, Japanese yen, Australian dollar, you have a loss. Any question, confusion? Anybody? And of course, you can find out the cross. This is called cross rate in New York. Is that okay? This is called cross rate in New York. Any question?
No, sir.
So in fact, in India also cross rates are available. Huh? So in international market, you can buy and sell any currency with another currency. Okay. So question, confusion. So here also, this problem is solved with a cross rate. Of course, there is a chance that if you try to follow this method, there is a chance that you will make a mistake because it's slightly confusing. Instead, the way I have explained you is I believe this is clear. That is how one rate is calculated and then the other through the other rate. So this is how it is done. Okay. Question, confusion? Go to the next one.
Yes, sir.
So then comes, this is, can you see?
Yes, sir.
So these are all the countries which have joined Euro. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16, 17, 18. I thought it is 19. So these are the countries which have joined Euro. Last country to join is Latvia. Latvia joined on 1st January 2014. So there are a lot of countries in the pipeline. You know, there are, in fact, they have a problem. That is why it is for the time being. So they have, Romania is the first one in the pipeline. So which is ready to join. What is the advantage of a common currency? As I have told you, there is no transaction cost. So if you convert one currency to another currency, there is a transaction cost. So you have seen that you buy in one currency, you buy at a higher rate and sell at a lower rate. So initially, in fact, there are many Italian, what do you call? UK was also supposed to join, but ultimately, no, sorry, UK never. Not supposed to. So there are many other countries which was wanted to join but ultimately did not. So in fact in Euro there are many things which are happening. One is Eurozone. So there are 27 members. UK left. So probably there are I think 26 now. So there are many countries which want to join Eurozone. They have a lot of things in common. So they are not taking Turkey. Turkey wants to join. So similarly, they have something called Schengen visa. Switzerland is a member. Switzerland is neither a member of Eurozone nor a member of European Union, but Schengen visa gives you common visa to all the 27 or 28 countries. So there are a lot of systems which are there. So initially, whatever you see is till 31st of December 1998. So they fixed the rate. I told you European Currency Unit, they fixed, it's a target zone agreement. So they fixed this rate on 31st December 1998 with European Currency Unit. Then over a period of, and they started 1st January. So over a period of 1 year. So 1st January, they fixed this rate. Initially, they maintained this rate by coordinating their economic and monetary policy. Economic policies, that is fiscal and monetary policy. And 1st January 1991, this rate was absolutely fixed, though the currency euro was introduced in 2001. So similarly, see, Greek, which joined in 2000, they fixed the rate on 19 June 2000 and they joined on 1st January 2001. So there are problems in Greece failed to maintain this rate because they also fudged this rate. So when you fix this rate on the basis of your monetary and fiscal policy, so they forget about that, is not part of our part. So after that, these countries, they have joined this rate. So it's a currency union. As I have told you, they target zone agreement, but they have a currency union. So these are the rates at which they have joined. So tomorrow, if any country goes out, 1 euro, theoretically 1 euro will be equal to 340.75 Greek drachma. Okay, so whatever, if you have 1 euro in Greece, that will be equivalent to, they will be convert that into this drachma. But at present, all of them have euro as their currency. Any question? Anybody?
Sir, won't the rate change?
Now they don't have their currency.
Yes, sir, but in 2001 they entered with 340.75. After 20 years also, like it might have, it should change, right? Like
suppose tomorrow Greece comes out of this. Okay.
Yes, sir.
So Now, how do you print again Greek drachma? On what basis? So suppose in Greece, total 2 trillion euro is in circulation. So 2 trillion will be equal to how much Greek drachma? 2 trillion multiplied by 3.75. Now immediately they will, if Greece comes out of that, since Greece's condition is not good. So among these countries, if you see, the Germany's condition is best, followed by Belgium, then Holland, that is Dutch. Where is Holland? Dutch guild. So followed by this, their condition is better. Now don't go by the rate, go by the, I'm talking about the economic condition. Now thing is, if tomorrow Greece comes out of that, Greece's currency is going to depreciate, since Greece's condition is not good. So 340.75, it might go up to 350 or 360 and all. That will happen once they come out of that. On the other hand, if Germany comes out of that, since Germany's condition is better than all these countries, their currency is going to appreciate. Got my point? So that will be the normal course, anybody can tell you. But on what condition they are going to come out of that, so that is, it depends upon that. Today Germany's condition is best, tomorrow Germany's condition may not be that good. Okay, tomorrow. So that's the thing. So there are a lot of problems among them also, economic problems. See, they don't have a monetary policy. All these countries, they don't have a monetary policy. Monetary policy is determined by the European Central Bank, but each of them has their fiscal policy. And you also know fiscal policy also is important because, if you have a fiscal deficit, that is going to fuel your inflation. And, if inflation in different countries are different, so again, that is going to create a problem. So, they publish the inflation in the Eurozone. They normally publish. But what happened in case of Greece, if you see among these countries, so the problem was, in fact, before Latvia joined, sometimes in 2011, the problem was during that period of time. So, Germany always has a fiscal surplus. That is, their incomes are more than their expenses. The biggest economy after Germany is France. Even France has a fiscal deficit. So naturally, if you just coordinate your monetary policy, then that may not solve all the problem. It is also necessary that your fiscal policies are also coordinated. That is why they said that your economic policies must be coordinated. So not only monetary policy. So when they fixed this rate with one European currency unit, after that, see, for a period of 1 year, they maintained this rate, and this rate was fixed on this, and on this rate, there was no change. Okay, so European currency unit was a virtual currency, but one European currency unit became 1 euro. So over this period of time, they maintained this rate by coordinating monetary and fiscal policy. Okay. And of course, euro was introduced much later, that is 2001. So this is how they are operating, reducing their transaction cost. And any question?
No, sir.
This is how the interbank spot dealing takes place. Say Monday, September 21, 10:45 a.m. Bank A says, Bank A calling, DLR FRF please. DLR means dollar, FRF is French franc. 25 means 25 million. Rate for 25 million. The rate depends upon also the quantity. So instead of 25 million, if it is 50 million, rate might be different. Again, these are the last 2 points, pips. So Bank B is specifying a 2A price, knowing that the caller is also a forex dealer. The dealer in Bank B quotes only the last 2 decimals of the full quotation. For instance, the full quotation might be 4.1540, 4.1552. So he is quoting only the last 2 points, 4052. Okay. So dollar FRF. Bank A says mine. Bank A says mine means Bank A is buying. Now again, DLR is the base currency, FRF is the quoted currency. I repeat, DLR is the base currency, FRF is the quoted currency. So what is he buying? Dollar by paying French franc. So he is buying dollar by paying French franc. So how much you have to pay? 4.1552. Is that clear? Yes or no?
Yes, sir.
So Bank A dealer find Bank B's price acceptable and wishes to buy US dollar 25 million. She conveys this by saying mine. So that's all. So if he wants to sell, so you know, Bank B is when Bank B is quoting to a price, Bank B is ready to buy, ready to sell. So the quote when he is buying, it is saying mine. When if he wants to sell, he says yours. So when I'll show you forward, I'll show you that. So this is fine. So Bank B, okay. I sell you US dollar 25 million against French franc at 4.1552. Value 23rd September. Now value you don't need to mention because this is 21st of September. Automatically the value is 23rd of September. BNP Paris for my French franc. So Bank B will be receiving French franc that has to be deposited in BNP Paris branch. Bank A said Citibank New York for my dollars. So dollars will be deposited in Citibank New York. Thanks and bye. Deal is consummated and back office staff will retrieve details, exchange confirmatory notes, faxes, telexes and arrange settlement. Okay. The deal is done by two dealer, but it will be settled by the back office. So at the end of the day, back office, they exchange confirmatory notes. That is, back office means these are all over phone. Spot deals account for about 60% of total turnover. Dealers work within limits assigned by management. Counterparty must be acceptable credit. What do you mean by counterparty? The Bank A or Bank B, anybody can run away. Any question, confusion?
No, sir.
So we have done till slide 22. So next class we'll start from slide 23. Somebody must remind me. So next class we'll be completing foreign exchange market and probably we'll be starting. We're slightly behind, huh? So, but your class I'm slightly ahead of others. About this what do you call about this class notes? I am today uploading in your Teams. Why Teams? Because Campus 360, the problem is Campus 360, the problem is 4 sections. I'm doing 4 different things. Huh? So from Teams also you can download. Huh?
Yes, sir.
Yes, sir.
Just check. Already uploaded. So if you have any question, otherwise. Okay, then bye. So just check once whether you have received it or not in Teams.
Got it, sir. There.
Okay. Okay, then bye and practice some problems. Today you have some homework. The problems which you have done, practice those. Okay?
Yes. Thank you, sir.
Okay. Bye. Bye.
Thank you, sir.
Thank you, sir.
Thank you, sir.
Thank you.
Thank you.
Thank you.
Thank you, sir.